Hey everyone, in this video I'm going to answer which one I think is the better stock to buy, Rivian or Nikola. Now to answer that question I'm going to look at their revenue, their cash flow, their inventories, and their valuation to determine which one I think is the better stock to buy today. So let's jump right into it, starting with revenue. And what you'll notice in this revenue chart is the explosive growth from Rivian, jumping from nearly non-existent revenue as a startup all the way up to 1.121 billion in revenue in the most recent quarter. Nikola, meanwhile, is having a harder time getting a jump start, getting off the ground here, generating 15.36 million in revenue in the most recent quarter. You can see that's not very much growth from where it's been over the last year and a half. The company has had difficulties, manufacturing troubles, shifting to new technologies, going from battery electric trucks most recently to the hydrogen fueled trucks that it's focusing on producing now. However, it still has significant inventory of the battery electric trucks that it's trying to sell to raise cash and hopefully to start boosting revenue. Now, I will note Nikola has pre-orders, hundreds of pre-orders for its newer technology cars, trucks, and it's just a matter of the company being able to effectively produce these vehicles, produce these trucks, and get them to customers effectively. The next thing I wanted to look at is cash flow from operations. I wanted to see how much cash these companies are going through, understanding that startups take time to get to a self-sustaining level where they're bringing in enough cash to fund their growth. Right now, neither of these two companies are at that level, with Nikola losing 107 million in cash flow from operations, although that was an improvement from the previous quarter. Similarly, Rivian losing 1.36 billion in cash flow from operations, also an improvement from the previous quarter. It's also informative to look at their cash flow from operations in relation to revenue. So looking at revenue, Nikola's 15.36 million in revenue and its cash flow from operations, the company is losing nearly 7 times its revenue in cash flow from operations. Rivian, meanwhile, is losing just about 1x its revenue in cash flow from operations. So the company is doing a better job in using cash to generate revenue. I also wanted to look at inventories for these companies because inventories turn into revenue, turn into sales, especially when you've got a company like Nikola and Rivian with innovative technology that usually has pre-orders and customers waiting to buy it. So inventories are valuable for these types of companies. Rivian, 2.161 billion in inventory. That's huge because when that turns into sales, that's going to be cash that comes in and that will help its cash flow from operations. Remember, when a company builds up inventory, that's a use of cash. They're spending money to make that inventory, right? So that's money sitting there. And then when they sell it, that's money that comes in to the company. So that's cash flow coming in. That's why it's critical to look at inventories and look at what potential they have to generate cash from inventory. Nikola also with 86.64 million in inventory. Most of that is the battery electric trucks, and they've noted that they're not going to build any more of those trucks until they sell the ones that they already have on hand. And then from here on out, they're going to do a build to order model where they're not going to produce it until there's an order. So they're not going to build up inventory. That's going to be a better use of cash for Nikola, which is strapped for cash. And if you saw my most recent video, Nikola just went out to the public markets and sold some convertible debt to raise $40 million in cash. Management has said they need around 600 million until they can get to that self-sustaining level, which they expect will happen in the year 2025. So they've got some room to go. They need more money to get there. And finally, I wanted to look at the forward price to sales ratio. and see which stock is more expensive according to this metric, and that is Nikola at a forward price to sales of 3.6 compared to Rivian with a forward price to sales of 3. So if I had to pick one of these two stocks today, I would pick Rivian. I like that it's further along in its progress in ramping up production and generating revenue. I also like that the stock is selling at a cheaper valuation than Nikola. So if I had to pick, it would be Rivian.
I want to thank the Motley Fool for sponsoring this video. Visit fool.com/Parkev for the 10 best stocks to buy now.